if there's a big focus on longs all of a sudden, I suspect that this is going to drop, and then we might get a rally back up before a bigger move to the downside like that. How's it going, fellow traders? Magic Trader here, and this is your latest CFTC data that was reported on March 12, 2024. Welcome back, welcome back. It's another weekend, and I hope you caught the video that we posted last weekend. It's been getting a lot of views. Should be a lot more than that, but hopefully with your support, your shares and likes will get those numbers even higher. We need to get the news out there to all the traders that are trading currencies and gold and oil, because they need to see the power of using the CFTC data in order to do their analysis. So let's start by taking a look at the snapshot of the positions held by the big banks. And if you take a look, you can see right away, if you look at the change column, you can see one big number sticks out, and that's for the S&P 500. That's right, minus 56,000. That's a big bear shift, big bear shift. And we can see over the last week, we did get a slight decline in positions. Okay, well, let's start where we always start off, by looking at gold. Here is gold, ladies and gents, and what do we see? We can see that long positions have increased. 214, 264, 283. That is massive, okay? That's so massive that we start to pay attention to this now. And why do we start to pay attention? Is because if you do historical analysis and look at the data from the past and look at price action from the past, what you'll notice is that there were times where price came to be this aggressive with long positions. And what we saw end up happening with price is a drop. And so now here we are at the highs of price and at those same numbers, which leads me to suspect that we're likely going to see a decline in price. Because once they start taking profits on those longs, it'll cause price to drop. And there was a moment back here in price right before this big drop here where they were up in a high number as well, up around that area. I think it was 260s, and then we saw this big decline in price. So this is something that I'm going to be paying attention to this week, and I think it may be playing a very pivotal role in how things unfold in the coming weeks. Now, one thing that I can't help notice is that when I look at retail traders, I can see that they're about 63% short right now. 63% short. Let's just take a quick look. I want to go and examine something here, because we've been tracking the gold positions. And I want to see where they're at. Okay, they were aggressive with shorts up here, and then they started to decline. Okay, so yeah, they're starting to get into long positions right now, is what I'm seeing. Okay, starting to get into long positions. So they dropped them from bigger, more aggressive shorts. Now we're at 63. So it looks like they're transitioning from being short to long, and so that would definitely help to see price decrease, at least the beginning stages of that. This week. So very interesting. Let's keep an eye on that one. Okay, so let's take a look at oil. Not much going on with oil. If you take a look at shorts and longs, you can see that there's not much going on with their positions. Yes, there's a slight bullish bias. How do we know that? Well, because if we take a look at coloration of the cells here, we can see that they're slightly green from where they used to be, much more neutral. Look at shorts, decline. This is probably the biggest move that we can see taking place. A big decline in shorts, 129. Now they enter into very cooled off territories. As you can see, the coloration of the cells turning blue. 103, now 95. Okay? And we've been just slowly increasing ever since we contacted that area of demand that we pointed out. Price has just been slowly making its way higher. And so if there's nothing to stop it, especially no additional short positions being piled on. The only thing we can see is higher, like that. I've been looking at this area, okay, just above 85 until we see some kind of a decline. All right, but just as just pure speculation, there's no trends on the chart or anything to suggest that this move is definitely coming. This is just the momentum that I'm seeing, lack of short positions being piled on, bullish bears slowly increasing, and the only obstacle I see is that area over there. Okay, US dollar. Longs very cooled off, and they've been so for quite some time. Shorts used to be somewhat aggressive, as you could tell here, but recently they became less so. So not much going on here. The only thing else that I would point out is we look at the coloration of the cells here. We can see that they're slightly red. Okay, so there's a slight bearish bias here, but you have to also understand that we just dropped. Okay, we are coming up and then big drop. So does that mean that this is going to continue lower? No. You know, the last cells see that we're starting to exit out of that bearish bias, and so who knows what's going to happen here. I do have a bullish bias on this one, and it's based on a lot of evidence that we've been collecting on other markets, so I just will share that with you. All right, so that's pretty much it. There's no cycles going on right now. As you can tell, they're not accumulating, doing any major distributing. Both positions are cooled off, so we will move on. Okay, here we go. Aussie US dollar. What do we have? Longs have been cooled off for a long time. They were aggressively adding to their short positions. Now they're profit taking on shorts. And what do we say always happens when they profit take on shorts? We've mentioned it a few times. A rally takes place. So you see that that is what took place here. They closed off some of their shorts, and we got that slight push to the upside. So what are we suspecting is going to happen here? We have a massive area of demand in play, and it has been in play for a very long time now. So what are we expecting? Well, I could tell you one thing. If you look at the positions held by retail traders, they are about 70% long right now. Okay, 70% long. So there is a slight bullish bias with the retail traders. And with them offloading their shorts, yes, we could definitely see a little bit more upside. But let me take you to the chart and see what's taking place here, okay? Here's a 4-hour chart, and we can see that some supply was contacted up here. And that supply was enough to push price to the downside. And now we see the removal of a demand zone. That tells me that price is definitely ready for more downside. And if that was the case, retail traders are likely going to continue adding to their short position or long positions, excuse me. And if they do that, it's just going to continue to fuel a move to the downside. All right, so very interesting indeed. Let's go over to USCAD, and what do we see with the USCAD? Over the last couple of weeks, we see some bullishness coming in. Remember what I was saying about how I suspect we're going to see some strength in the dollar pairs, and we've been seeing evidence across the board with that. Well, here's some evidence. With the increase in long positions, 42, 62, 66, you can see that the only aggressive sells right now are longs. Yes, we used to be a little bit aggressive with shorts, but this last set of data decreased them quite dramatically. And if you look at the coloration of the cells here, 65% of their overall positions are geared to the long side. Okay? Your average long position is 54,000. We're at 66, so we're well above average size for long positions right now. So I think this might be setting up for a move higher indeed. If we look at retail traders, we can see that about 79% of retail traders are short. 79% of retail traders are short. So they could be in the process of continuing to add to those shorts. I suspect that as price was rallying up here, that's when retail traders were adding to their short positions. Okay, so We got to be somewhat careful because if they're adding shorts, eventually they're going to exit out of those shorts and get into longs, and then we could see a drop in price form. But I think if that does happen, it would be short-lived, and then we would see a reversal back to the upside. Okay, just some things to think here. I recently located this area of demand, and if price does decline, I do suspect that that will hold, and if not, we will likely just see a move to the upside. It's hard to tell because I don't know what the retail traders are going to do with their positions, and so we'll just have to wait and see. What I can say is, you know, there's 80%, but they could be bailing on that to go long right now, or they could just, you know, aggressively continue to add to that short position while the banks start pushing price even higher. We'll wait and see. US Swiss long column, you can see a little bit of aggressiveness there. They reduced their shorts from 16 to 11. So again, we're seeing a bullish bias as we were seeing with the USCAD. Coloration of the cells here are turning green. If you look at the 13-period average, 19,000, we're at 29. We're well above average size for longs, which means there could be a bullish bias. Okay, a bullish bias here going into the week, and if this momentum continues with this, we'll definitely see a move higher build from this area. Okay, retail traders about 61% short, so they have a bearish bias while we have a bullish bias. Something to pay attention going into the week. All right, here we go. We got Euro US dollar. And if you look at just the long and short columns, you can see what they've been doing is decreasing their long positions, which is great because we have a bearish bias on this one, right? So we would want to see a decrease in long positions, but we would also want to see an increase in shorts, and what we're seeing is a decrease in shorts. So what does this mean? Why are they decreasing shorts? I think there's a good chance that they were decreasing shorts because they wanted to stabilize the market while they offloaded long positions. So I think there's a good chance that that is what was taking place. I will briefly go over to the Euro US dollar chart and show you something here. This is the Euro US dollar 4-hour chart. And here's what we have. I did a live show earlier this week talking about retail sentiment and how to read it, and how it is used for us at the White Oak Trading University to use as a timing indicator for positions. And I said that they've been short for quite some time, which means eventually they're going to bail and get into longs, and when that happens, we're going to see a decline in price, and that's exactly what happened here. You see they went from 65% short to 66% long, so they bailed on shorts, went in long, and lo and behold, price drops. So now we're testing this area here. This is the ascending structure that I've been talking about. Let me go and show you something like this. Here's the ascending structure that we've been talking about. All right. And as it's been ascending, the retail traders have been focused on shorts this whole time. If there's a big focus on longs all of a sudden, I suspect that this is going to drop, and then we might get a rally back up before a bigger move to the downside like that. Okay, so this is something that I'm watching for and something that you should be paying attention to as well. If I look at retail traders, they're about 57% long right now, so they're not aggressively long, but should price start to decline, they'll probably be adding to those long positions, which will eventually go against them as it continues to drop. So something that I'm watching for, and I'm waiting for that short signal. And once it takes place, I will be entering into another short position. Pound US dollar, look how aggressive with pounds positions, okay? 123. Let me point out something to you, boys and girls. 123,000 is very aggressive. Their all-time maximum largest size position for longs have been 135. You know what this is telling me? They're getting ready to take profits on long positions. You know what happens when they take profits on long positions? That's right, price drops. So you see the bias, you see the evidence that we've been collecting piece by piece, a little bit here, a little bit there. It's all coming together to tell you what? That we are likely going to be seeing a drop in price on the pound, the Aussie, Kiwi, Euro, and dollar pairs, and the dollar going higher. So 123, pretty aggressive. Look at average size, 80. We're 123. That's massively over. So I suspect that we're going to see a drop in the coming week. And so if you take a look at the 4-hour chart, this is what it looks like. And we have an area here of demand right here. And as you can see, that area has been removed, which is opening up the floodgates for a move even lower. So I think this could really kick into high gear, and we could see momentum come into play this week. All right, so I would be on watch for that. Okay, an interesting thing is retail traders are about 55% long. If this continues lower, yeah, they're probably going to continue adding to those long positions, which is only going to put fuel to the fire and see more momentum to the downside on this one. So I'm excited about this one, okay? And you should be too. US dollar, Japanese yen. So, look, they already started taking profits on their long positions. 183, we are at the highs. They were very aggressive with longs. They took profits. Now we see price declined, which is right here, the big decline on the charts. But if you look at the coloration, they're still bullish, okay? They're still very bullish. Now we're saying upside, right? On the dollar pairs. Well, US dollar, Japanese yen is a dollar leading pair. And so I think that there's very good indication here that price will hold this area and rally up. But for us to know for some high degree of certainty, we got to look at the lower time frame charts. And what I'm seeing is we have significant demand zone coming into play here. And now price is coming into an area of supply. So if the banks are going to push price higher, you know, what we're going to be watching for is for supply to be removed and for price to head higher like that, okay? So that's what we're going to be watching for. US dollar, Japanese yen, retail traders are about 64% short. 64% short, okay? They decided last minute, you know, to bail and to get in short. So price is likely going to continue higher. They're going to continue adding to their shorts, which will make it eventually super aggressive. Wouldn't want to be doing that at this time. Kiwi, US dollar, longs, shorts, both cooled off. Not much going on here. This pair hasn't been, you know, one of much interest for me for a long time because there's really nothing on the charts there. Coloration of the cells, a little bit bullish, but it used to be neutral. Not really doing much, like I said. We started to see that move down this past week. And if everything else is a good indication of what is likely to come, then we are likely to see a continued move to the downside here, okay? But retail traders, super long, 86%. You know what that means? They were adding longs as price was dropping. They're likely going to start bailing on that. And if that happens, then we'll see a push to the upside. But they could bring this into the 90s, and they just continue to push price lower and lower and lower. Okay, but over time, I believe, with all the evidence that we've been collecting, we're likely going to see price drop on the Kiwi. All right, folks, there you have it. Thanks for joining me for another week. Really appreciate it. Hit the like, leave some comments below. I always love to read your comments. I really do. If you have any suggestions for these episodes or for the live sessions that we've been doing, if you haven't been watching those, you have to. Make sure you subscribe here. Make sure you get alerts. Make sure you watch our live sessions every morning, Monday to Friday at 8 a.m. Eastern Standard Time. We take a brief look at the markets and set you up to be winning in this game we call trading, okay? Insights you won't find anywhere else, supply and demand dynamics, biases, all that good stuff. That's it. You want to find out more? www.whiteoakfx.com. Thanks. Enjoy the rest of your weekend. We'll talk to you later. Bye-bye.